Right, so welcome to day 17 of the TradeFlow competition, day 33 of Anomaly sequence. Today I'm going to be going over pretty much the start of where I really started getting quite a lot of returns in the competition and being a lot more confident with my setups because everything was off the backbone of higher time frame being in sync. So as you guys have realized in the last video, we talked a little bit about just the higher time frames, right? Going over where we were on the higher time frames, looking at H1, looking at H4, right? Understanding that we are in that leg, right? In that bearish leg right here, and that we wanted to make sure that we are falling in line with where we wanted to top out. So we covered all of that, right? We went over that. If you didn't see that just yet, make sure to check that out. Because this is the start of pretty much that winning streak. What really chipped me from going into top 5, into top 3, into second place consecutively, closing off the second week of the TradeFlow competition and kind of giving me that boost to be very aggressive on Monday, Tuesday, and Wednesday in the third week of the TradeFlow competition. So let me go into these details. Let me kind of showcase you what we're looking at. And overall, you can see one of two things, right? We can see that right here, we're topping out in that daily sliced imbalance, right? Not something that I like to use a lot, but overall, we were above EQ, right? Equilibrium of that entire bearish leg. And we are into pretty much just this area where we want to start looking for short positions. And this day was, for me, quite a good one in the sense of I started off super aggressive and I started kind of pyramiding into this position once again, just like what I did at the start of the competition. And you can see here, this is literally it, right? Make sure that your timings are good, because if you have your timings wrong with this Asia range indicator, you will notice that you can have it look at 0.15, sure, right? You can have it here at 0.15, but some people, if they have it on the wrong thing, it will actually showcase here, and then you wouldn't have had this shift. Overall, this shift was there, again, within that one standard deviation range of that Asia range protraction. So if we do it above, you can see that it fell really nicely in that area. The thing is, we didn't have arrays, right? And you're like, okay, Max, but you talk a lot about arrays and how much you need them, but we didn't have them. Well, you look closely, right, and you see that we actually had bullish arrays right here, imbalances in that protraction, right, in that protraction against our designated bias for the day. We're topping out, we're in that OTE, we're in the premium of pretty much that entire leg, and then here we are looking for shorts, right? We don't have what we like when it comes to having, let's say, an order block, right? We don't necessarily have an order block here. You could argue that this is your order block, but then even that, this was the ideal scenario, right? But then you can see a couple of things, right? We can see that when this happens and you want to play a pullback, right, you just be content with a couple of things, right? If this is your play, right, and you understand that this is where your low resistance liquidity is, where your final target is, this isn't something that you can isolate. So my SL was well above here, a relatively big SL, right? 22 pips SL is quite big. So I get that people wanted to do this, right? Totally logical that people wanted to do this. Some people, again, you will see it happen, right? Price will pull back and you won't get it, right? This imbalance here is closed. You're not getting the tap, right? What you could be doing, and this is, you know, kind of advanced mechanics, right? If this is your leg, right, bearish leg from top to bottom, from body to body, EQ is here, your OT is going to be roughly around here. Don't be greedy, right? You know, what is there to be greedy with? If you know that you're going to, one, be pyramiding in this position, two, know that if you can just enter off the shift, it's not the end of the world, right? If you know that your exit is going to be roughly around here, around all this low resistance liquidity that's behind my face, all of this, right? So one of two things. I think that this is the best case example of where you shouldn't be too greedy with your positions. Just let the position go, make sure that you are ready for that, and just let it do its thing, because this was the start of something really, really nice. Pip wise, this boosted me roughly, so I shot this half normal bullet, so 5% risk on the competition, because my SL was a bit wider, and this gave me, so everything is in lot sizes, right? On a 1K account, so 0.5 lots, 63 pips average, right? But I obviously did take partials along the way. Scaling into it gave roughly 40% return. Not bad, right? Really not bad. I'm going to be breaking down this position in terms of management and how pyramiding works. So I think that's the most important aspect of today's lesson. In this sequence, in Anomaly sequence, where you can understand that, hey, what does price action need to look at? So here, right, you're on M15, you take a shift entry, you don't have an isolated high, and you don't really have an array to enter on because you're going for the shift. You see signs that you like, right? Intent in the direction that you like, intent showcased in the direction to go down. This is where it gets a little bit scary, because you're like, okay, hey, we take Asia low, right? We come back. We nearly take Asia low, right? We come back. And you want to see one of two things. You actually want to see more intent. So this isn't your sign to go on M5, right? You shouldn't be going on M5 just yet, right? The moment that you showcase an array is when you can go on M5 one more time. And that is here, right? Right here, we showcased our first M15 imbalance. And it's miles away, right? So there are guys that spazzed out, took way too early partials here, right? But you can see one of two things. If this is, let's say, your designated buy side curve, right? This is above that sliced imbalance. We top out, we do our whole order pairing, and then we go lower. What you want to see is the most recent bullish arrays being taken out, right? And then you look at cause and effect. So right here, we have body close below this bullish imbalance. And then in that body close, we can actually see that creation of a bearish imbalance. It doesn't get respected whatsoever, but order flow has switched, right? We're inducing opposing arrays, creating favorable arrays. And just like that, you know that there's more that we can target. We have this low resistance liquidity that we can target, and this low resistance liquidity that we can target. Both of these are significant areas that we can target. So this is where you start pyramiding your position, right? And what that actually means, so we're not excessive pyramiding, right? Even in this competition, that would be against the rules. Pyramiding just entails that you're mitigating risk, like scaling in, but with less accuracy in terms of criteria that you actually need. So you can see very, very nicely where this position like ends, pretty much. And for me, that's always going to be around a session close. So this is obviously London close, but I held this, right? This is the first position that I kind of held overnight, and I held over the weekend, right? We're going to go into that in the next video, but you can see exactly why. So there's this, and then what we do in this entire leg, I could not pyramid, right? I could not add shorts, but just like this, what I did after this creation, once we get another body close under this bearish imbalance, so that's right here, you are allowed to enter pretty much off of this isolation, right? And you can keep this going. This is something you can keep going. And then with SL, for me personally, I just kept this going right here. So what you get is some sort of negative RR, but you'll see exactly what I do. With this position, if you know, you've seen my Instagram highlights, I was holding all of this to pretty much the bottom, which was very, very nice. But this is something that you can do, right? You go with a lot lower risk. So a quarter of the risk that you do in the original position. So if this was 0.5, I'm literally in here with 1% risk. But it's those little things that add up, those extra percentages, especially in a competition, whether it's 1, 2, 3, 5% that you can chip away extra. So nice. You're literally dripping the bucket and you're dripping it full. What you can do from here is once you get that array, like what I said, only then you can go into M5. So you see one of two things. You see that M5 being created, and from there, you are pretty much able to look at order flow on the lower time frames. So just on this body close right here, I did M15, totally okay. not isolating this high whatsoever. But from there, you can look at M5 plays, right? And you're going to see why that is important the next day. But I hope that this position on its own gave you a little bit of insight as to how I entered that first shift. Super simple stuff. We take Asia high, right? We protract, we create bearish arrays, and you enter off of the shift, right? Very, very simple stuff. No pullback in this one. I wanted to be in the move because on the higher time frames, we were very, very far away, high in premium in our dealing range. So that's something that I was very, very confident in. So I hope that that makes sense, and I'll see you guys in the next video.